Good morning, guys. Welcome to this Friday, February 28th, last trading day of February. And we'll see if we get some further craziness today. It's been one heck of a crazy week, that's for sure. Today we have the PCE number came out, PCI Friday. Uh, and what else do we got? We got news-wise, international trade and personal income is at 8:30. So in that personal income number, we have that PCE index, and that's inflation read. So and we'll see how that shakes out, but that could be certainly be a little bit volatile at that time. So 8:30 we get a bunch of news. Chicago PMI at 9:45, and that's about it for this Friday. So I think the big one is going to be the personal income number and the PCE index, and then in basically the what inflation is doing. So we'll see how that pans out. But that's 8:30 today. This whole week though has been dominated by craziness. And if you look at, I mean, just pulling up a little basic. This is like a daily chart, just so you get a sense. I have this. How many days do I have in this chart? It's a daily, 45 days back chart, and you can see here how we came up here in beginning of January, nice little rally, went sideways. Now we gave everything back again. So that's pretty much the first 2 months, right? Ran up, sideways, back down again. And as I thought yesterday, we had this tariff news come out early yesterday, starting this whole thing, this whole move to the downside. And it's by March 4, what is that? That is Tuesday or Wednesday next week or something like that. They're supposed to put on the tariffs. So there's going to be another interesting week next week, and the market is just reacting to tariff threat, and I think it's very much irrational kind of reactions to it because no one really knows how those things going to pan out and play out. If it's going to be a deal, then nothing happens. If they drop tariffs and they adjust, then it'll be fine. If they actually stop the flow of, I think the big deal is the flow of fentanyl. But if they get a handle on that, they could also avoid a bunch of stuff. So it's so many balls up in the air and so many things that can potentially can happen. So I think the reaction is pretty irrational. But no, market is a market. People they press that sell button first, and they have algos and which does it automatically. And when headlines like that comes across the headlines. So headlines comes across, algo sell, pile-on effect, and then people freak out, the hit stops, and then the whole thing keeps going. So that's what you're seeing. And as you can see, we trade it higher, we grind higher, and we take the elevator down. So as you can see, it's been one rough week. So we started off the week up here, thinking that we were ready to maybe extend. We're testing these upper edges at 61.50, so now we're down here at the 58.50s and barely holding on to that. So there you go, 300 points, right like that. So pretty much pretty ugly day yesterday, but we'll see. I mean, I'm not going to assume it's going to be running out of gas. It is going into the end of the month. We have that going for us. If this was a sell-off going into the end of February, we may have a shot at a little bit of recovery going into next week. If this is tariff threat and its market's going to stay in a state of freakiness, then chances are we're going to stay. We're not going to see a little recovery rally until those initial tariff questions are resolved. So anyone's guess. At this point, I'm going to start off from the short side, though. We're going to sell strength for rotations back down again. If they can trend up above this area, the 59.15s, that would be the, remember, we had this 6,015 area. That was the resistance area on the way up yesterday. Right now, it's going to be this area, the big ledge at 59.15. So they can get up above that low volume area at 59.25, starts at 59.15 resistance. We may have a shot at going back up in this upper range again. So right now, we're probing the lower end of this big range. And at this point, it's anyone's guess if they're going to be able to retrace it or not. So not a big retracement. It took a little bit lower in the overnight, retraced a little bit. It's anyone's guess how this is going to go. If they start retracing pretty hard, we may see a recovery, a nice little recovery. I would wait for them to take out this 25 level first, these single print L prints, trade up above that. They clear that 59.30s. At that point, I think we may have a shot at going back range bound. I will go back range up at that point. So starting off from the short side, looking to sell strength. 5900 or yeah, 5900s, 5910s, 5920s for rotations back down. Above that 5930s, we'll probably in good shape to take off the long bias and go back range bound. So that's kind of how we start off this thing. So as you can see the crosshair here, if I move it down here, that edge, this is right there. See that? That is exactly where that edge is. So if we can get up above that, we have a shot at coming back range bound for the trading day, maybe close out without a complete disaster. But if they press on that sell button again and take out this support area, the next support area on the way down is going to be down here. So this is the area they're trading in this little tractor. Next level down is going to be down here at the 5770s. That's your tractor. You have support here coming up at the 5820s and then at 5770s. So we got some stuff going on here. So we have some little bit, and below the 5730s, I think it's going to be then we are in a little bit bigger trouble. So we'll see. At this point, doesn't look like they're done with the selling yet. We have the end of the month coming up, which is, of course, if it's related to that, taking profit by the end of the month, anything like that. We have a shot of recovering next week. If tariffs sort themselves out or it doesn't turn into just a flat-out trade war, then we may also recover. And so anything can happen. It can happen pretty quick too. So it's not necessarily that you just get a headline and they announce a deal and boom, they're done. So it can happen pretty quick. But I wouldn't start off on the short side. If they trade up above these two resistance areas, the 5920s and the 5930s, I'm going to take off the short bias and go back range bound. All right. On the way down, there is support down here in this area, but I'm just going to be a lot less aggressive on it. I tried the long side yesterday, and it's when I thought we had a pretty good support area, and the volatility just absolutely creams you. So you had to be really cautious, really on top of your game. And so looking to buy against the 5880s, the 70s down to the 5860s. Rotations back up again with a bit of caution, and given that we're still leaning towards the short side of the market. It looks pretty volatile here still going into this morning. So this bar, what is that? It is 84 up to 88. Okay, that's 4 points. 86 to 93. That's 7 points. Not crazy volatile. Not crazy volatile. So we'll see where they're going to go with this, but at this point, that's how we get started. Let's see if we're going to get recovery today or if they're going to be as further pressing on that sell button. Going over to the bonds and the NASDAQ. Bond market is not moving a whole lot, so that's a good sign. This is the 30-year, and you can see that these guys, they were up here testing the 118s in the overnight. That was a high of that prior day. So far back down again. So a bit flight to safety going on there, but yes, they tested it, knocked that back down again. So they're pretty much settling in here on the 117.20s. And that is our, let's see, my capital flow chart is on the bond. There it is. And we roll to the June expiration. So the next rollover is going to be, I believe, in a couple of weeks. Not next week, but the week after. I think they roll. Yeah, that's the week after they roll to 2 more weeks before we roll the indices to the June contract. But here we have the high volume area at 117.26 to the 118s, and that's pretty much what we are trading at right now. So they're going back and forth there. So they're testing that upper edge at 118, they're backing off, testing the lower edge at 117.16, and going back and forth in that. So we'll see how that's going to flush itself out, but definitely since it's not a flight to safety panic going on right now, it looks like. And the bond market hasn't, the reaction from yesterday's trading was pretty much non-existent. So that's a good sign. If the bond market keeps trading higher, then I think there's a lot more fear out there than I might think. But I saw someone put up there this fear gauge, Charles Payne, if you ever watch him, and put up the fear gauge, extreme fear. Like, yeah, well, you see your account drop 10, 15%, your trading account, or like your 401k, then yeah, it tends to do that to you, right? It tends to do that. All right, NASDAQ. NASDAQ is one of those they want to watch, right? They have been, look at that. I may have to compress this further. So these can barely have a, what do I have here on the, I'm aggregating it 75 ticks. That's how much I'm aggregating that. And it still looks like that. That just gives you a sense of how volatile that thing is. But we are down well below 21,000, down in this lower area. We have taken out this area of support around that 2,800. So that's a full 1,000 points lower than the 21,800 we talked about the other day. So that's how crazy that is. Remember that? This is the 21,800 up here. They took that out, blew through this whole area, right? And now we are flirting with the lows and taking that out. So next level down on the NASDAQ is going to be attractors down here at the 2,400s. And we have an edge, or we have support also at the 2,200, 280s. So we can certainly probe lower. That it is not by any means not impossible. They have kind of run it below an obvious support area, so we may see a little bit of retracement, but I'm not going to completely count on that. So we'll start off from the short side. Let's see if they can get some strength out of this. You never know. If Friday, end of the month, maybe a rally, who knows? I would expect then if they can get up above the 21,000 level, this area of resistance, I'll be more inclined to think that we have a shot at going back range bound. But at this point, I'm pointing lower, pointing to the short side of the market, trading from the short side until they get up above the 21,000s again. So that's kind of how we get started. Now, if they retrace back, they can certainly just kind of stall at that 2,800 attractor and build value there for a while. It certainly happen. But we are well off the high. So we are 2,400 points off the high. So a good 10 some plus percent to the downside right now. So trading from the short side at this point, I'm going to sell strength. And the one that's keying in as 2,100, that's 21,000 is up right here. So you see this resistance area starts at the 2955, 992. Yeah, 21,000 is right there, 21,000. So these two resistance areas had to come out before we start thinking and taking off the short bias. So looking to sell strength, 670s, 750s, 790s, 840s, 890s, up to 950 and 20. You have a lot of range to try to get short against. However, you see, if they start moving this higher and you start seeing that retracement trade develop, there could be some long trades in there, and that would be pure. You have to be really cautious about that. Make sure you don't sell into or buy into the resistance on any of these on the way up. If you get in on it, but if you get on a good long trade and if it looks like there is a rally, they can start to run it up here. So if they're going to run it up here to the 890 or higher, there's going to be a nice long trade in there somewhere on the way up there. So just something to look for, and the same on the ES. It has to be a lot less aggressive on it. So if you're going to try a long trade like that. But there could certainly be a retracement trade in there. But I would still be looking for shorts all the way up to that 21,000 mark. That is it. It really makes trading interesting when you have this range and this much volatility. So really puts it makes it fun and also pretty dangerous. So gold pulling back a bit. Let me see. I'm gonna pull out my gold chart here. Gold has taken out that 2180 support area. This whole area of support, not very super well defined, but you see the volume edge there. They're heading down to that 2850 at this point. So I think we may see further weakness on gold. The fact that gold's selling off like this is also a little bit counterintuitive, right? You think that all this geopolitical strife would be good for gold, and it's gold selling off. So, and never can quite figure that one out. Or people may be selling gold to buy equities. Who knows? At this point, though, I think they're heading down towards the 2850s, maybe testing this lower end of the range. So I would start off from the short side. They're going to sell strength. If they can trade up above that 2880s, 80 to 90s, this area of support, resistance on this side. There's going to be resistance at 880 and 890, these two areas of resistance. If they can trade up above that, I'm taking off the short bias and going back range bound. But looking at the sell strength at against the 2877s, 84s, and the 89s. So these three levels of resistance for rotations back down. And not going to be very aggressive on buying against until they get down to that 2848s and the 2845s. These two support areas right there. It's a little high volume area right there. So they're right down in this little low volume lull and basically heading back down there. So I will start from the short side and see if they can take that lower. All right. So that's gold. Trade that from the short side to get started, but they could retrace pretty quick. So that could certainly be back to that 2880 attractor pretty quick. And then finally oil. Oil just going sideways. They're trading in that lower range. And that analysis is going to probably stay very much the same. They're going to get these little pops on tariff threats and on whatnot. Now they're trading here. You see, they've been moving in 1, 2, 3 distributions to the downside. Very organized, very orderly, if you wish, but not straight line by any means. So they're down here against this lower area. They retraced a little bit, retested the upper area, back down again. So yeah, I would just trade this as a range band market right now. Looking to sell strength up to the 70.45 and 70.50s. Looking to buy weakness down to the 68s down here, and then basically trading it in that range. So initially looking to get short against the 69.70, that would be aggressive. 70.20, 70.50s. Looking to buy against support 69.20s, 68.70s, 68.30s. Last one would be that 68s rotations back up again. So range bound trading on gold, we're trading on oil, we're trading in this range, right? Corresponding to this range over here. Okay. So that's oil. I'm going to stay away from oil. It's been pretty sloppy. And if I can find a good trending day, maybe try to get on it. But it's been pretty sloppy, pretty, pretty, well, sloppy. They had big reactions and then nothing, and then big reactions most likely based on news. So we'll see where gold. I bet gold from the short side, oil range bound, and we'll see how that develops. All right, back to the ES, and so far we are pretty much where we left it. So today, question is: are we going to get continuation to the downside? Are we going to see some sort of a retracement? And on the ES, they had to get up above that 59.30s before we take off the short bias. So they have not as crazy much range as the Nasdaq, but still plenty of range to get short against. And the same dynamic there. If they start retracing this whole big move to the downside, pretty good violent move late in the day yesterday, start retracing that, there could be a long trade in there as well. Just be mindful that you don't buy into these resistance areas, because that could just get you caught in a shitty spot. Alrighty, guys, we'll wrap it there. Good trading this Friday, and I will see you back at 11:30 for the next update. So good trading. If I can spell it right. There you go. Good trading, and I'll see you back at 11:30. All right, later.